Hey guys, welcome back to Exploring Temecula. Really excited for this video today. I'm talking about buying a home, refinancing a home during this coronavirus crisis, I guess you would call it. I've read a lot of things online. I've seen a lot of things on Facebook that make me cringe, and it's just simply not true. So what I did, one of the most important things I can do as a local broker is provide the best vendors for not only my clients, but just put accurate information out there for you. And I have contacted my local lender. Her name is Stephanie Billions. She's a top producer. She's a former Navy veteran. She's a former junior U.S. Olympian. She is going to break down the lending process during the coronavirus for you and really just answer the important questions that you might be asking yourself. Hopefully this video will really push you forward and make you understand that nothing really has changed for a lot of lenders, especially Stephanie. She still has the loan programs that you as a buyer will want and need. And again, she's going to explain that to you. So if you're interested in the Temecula area, make sure you subscribe to this channel. We've got a lot of videos coming out each week that are, not only helpful in the real estate field, but just in general of what's going on. Okay guys, so here we are with Stephanie Billions, and I'm not going to get into too much of an intro as we already did, but I really wanted to, squash some concerns for prospective buyers in regards to lending right now. And it's really not as bad as you might think out there. And I just want it to come straight from a lender that I trust and that I've used and that really knows what she's talking about. So I am going to pretty much, on this video, I'll just try and be the buyer, maybe ask questions that a buyer might want to know. And, you can go from there, Stephanie. And again, just, squash some concerns or, fears of this market and being a buyer.
Absolutely. Thank you for having me on, Joel. Really appreciate it.
No problem. So I guess the first thing is, do you just want to go into, if you're a buyer right now, how you can help and how things have changed, but how things may have not changed with lending in regards to your company?
Absolutely. So one of the biggest changes that we've seen is the fact that we actually have lower interest rates. As a company, that is the biggest change we've seen. You may have heard a lot of different things on the news or, seen them on TV. And the bottom line is we're not seeing that with Cross Country Mortgage, who's the mortgage company that I actually originate loans with. We've actually seen nothing but positive come from this.
Okay. And then, okay, so I'm a buyer and I'm nervous because I just heard that, Chase needs a 700 FICO and everybody's changing their loan requirements. So I'm sitting here and I want to buy a home and, and I'm looking for a lender that, maybe can shed some light on, changes, or if there have been any changes, or if there have been changes, maybe all lenders aren't equal. So can you go into your company and maybe how you can help or benefit buyers right now in regards to the changes that have happened?
Absolutely. So those are great questions, Joel. So bottom line is one of the biggest changes that industry-wide we have seen and that you're referencing is that banks are starting to put the hammer down on guidelines. They're raising the requirements for obtaining a mortgage, whether it be a refinance or a purchase, and that's to basically shore up some of their liquidity issues. Cross Country Mortgage, again, we don't have that issue. All of our loans are still the same. Our guidelines are the same. We haven't placed any overlays, which are lender additional guidelines above and beyond Fannie and Freddie guidelines. We haven't made any changes to those. We still go down to a 580 credit score on an FHA loan. We can do a conventional loan down to a 620. So, everything is pretty much the same. Haven't seen any changes there, again, other than the interest rates being much better.
Okay, cool. So So basically, again, me as a buyer, and I am in Southern California, and I want to buy a home, and all of these things that I'm hearing on the news, I can contact somebody that actually really hasn't had many changes in the loan process or the lending game in in the last month, right? Correct?
Absolutely. Absolutely.
Okay.
Yep.
Perfect. And then I also, I'm acting as a buyer here, but I just want to, personal experience in the last couple of weeks. I've had a listing fall out of escrow because they lost their job, or the lending requirement, maybe not lost their job, but lending requirements have gotten a little tougher. If somebody has fallen out of escrow because their lender won't give them a loan, are is what can you do for that person? What can you do for that buyer? Could you save the escrow for them?
The chances are very high that I could save the escrow, because if we kind of go back a month and a half ago, before things really started to get extreme with COVID-19, we all were, for the most part, playing on the same level. But what ended up happening was, as I stated before, is that some lenders have become, they've placed overlays on top of their guidelines from Fannie and Freddie. And Fannie and Freddie, they basically buy all loans. At the end of the day, they essentially buy most of the mortgages that are originated. So they set the standard. But then you've got mortgage companies, individual mortgage companies, that will put on a lender overlay, is what it's called, and that's to shore up any risk that they and their investors feel uncomfortable with. So, as I had stated before, we have not made any changes like that as a company. We are strictly going by Fannie and Freddie guidelines. So that is what we follow. So it's again, the way I would save the loan is I would save it by not having any additional overlays, guideline overlays. That is ultimately more than likely what killed the deal to begin with.
Okay, yeah. So again, guys, I mean, just to make this clear, if you qualified for a loan a month ago, and for some reason the lender you're using, you know, said you don't qualify anymore, chances are Stephanie is going to take those same qualifications that you had to do a month ago. She hasn't had any changes, so that same loan can close today that couldn't close 2 or 3 weeks ago. Correct, Stephanie?
That is correct, yes.
Okay, perfect. Next question, I have them written down here. Okay, so you're in Murrieta, correct?
I am. I'm on
Okay,
Ivy
so
Street near Old Town Marietta.
perfect, guys. Or perfect, Stephanie. So, guys, it's important that for me, I know real estate agents, it's more important that you can have somebody local that understands the market, but it's equally important, not only does Stephanie understand the market in regards to real estate locally, you can also go and see her. It's can be more personable, correct, Stephanie? It's not somebody,
Absolutely.
you're
Yes.
doing a loan with somebody that mails you something from Northern California. Stephanie understands the local market, and if you have any questions or if you like to meet in person, it's just a closer sort of relationship, and a lot of times that's definitely helpful in a transaction. Correct?
Most definitely, yes. Yeah, I've been a native here for the last 21 years, and I've seen our area grow and expand. So I know it firsthand, and I do love interacting with my clients face to face. I think that's the best way to deal with your personal finances.
Okay, good, guys. So again, and the reason I'm bringing this up is, being a real estate broker, everybody talks about, understanding the market, and you want somebody that knows the market, has lived in the market, but, to have both myself and Stephanie that are really close by, I think it would be a really huge benefit to any buyer looking to purchase a home right now or anytime. So if you're in the Murrieta area and you are looking to refinance, but not only just the Murrieta area, but if you are in that area, definitely, Stephanie is there for you. What else? I really, you've hit on most of the points, Stephanie. I mean, is there anything in closing that you just sort of want to let buyers understand in this time? You can just sort of go off on your own tangent on making them feel comfortable, making them feel it's okay, and you're here to help.
And, as a final kind of marketplace update, I just want you to know that I did run some numbers for some examples on a couple different mortgages so you could kind of have an idea of what things are looking like. And if you were to purchase a home for $500,000, you could put down as little as 5%, and your interest rate would still be only 3.375% with no points. That's an example that I have. It would require a 720 credit score. However, it's going to be very similar to that, even with a lower score. As I had stated before, I have the ability to go down to a 620 score on a conventional loan. The payment on something like that, and Joel did ask me to provide this to you guys, the payment on that total for a $500,000 purchase price with only 5% down would be about $2,900 a month. That's with everything: taxes, insurance, private mortgage insurance, everything. So I hope that brings you some comfort in knowing that those possibilities are there. The final thing I wanted to add is on an FHA loan, and this is where, again, I stand apart from my competitors. On an FHA loan, those loans, government loans, FHA and VA, a lot of those loans have seen the credit score requirements be raised to sometimes a 680 or better. We are still, 580, and VA doesn't have a requirement. So 580 on an FHA, no credit score requirement on a VA. But unbelievably, the interest rate on that scenario is 2.875 with no points on a 720 credit score.
That's crazy.
So you could effectively get into a house with 3% down on an FHA loan and be at 2.875% with no points. So fantastic times.
Hey guys, so before we end the video, I just wanted to make one last point. A lot of you know, and I'm going to use Temecula for an example. If you're renting a home that's 2,300 square feet right now in Temecula, you're going to be paying anywhere from $2,300 to $2,700, $2,800 a month. You just heard Stephanie talk about it. I mean, you could get in a home, everything, taxes, insurance, monthly mortgage payment for $2,900 a month. So it's something for you to think about. And if you have any questions, please, again, I'm going to put our information in the description. Her name is Stephanie Billions in Murrieta. My name is Joel Daniel. I'm owner and broker here at Greenleaf Real Estate. We'd love to help you. If you have any questions, again, reach out, and hopefully we talk in the near future. But until next time, thank you very much. Exploring Temecula.